But for the most part, crypto on the weekend is quiet. The Bitcoin guys, yesterday had this nice little pop down here. I don't know if you guys can see it, but again, nice little pop. And basically today we reversed it again. So there's, every time this happens, by the way, all right, every time you get this type of thing or any of these other things and you reverse, all right, I always see people coming out saying, oh, that's a great move. Maybe it's a new bull market. You know when to pay attention to Bitcoin? When this doesn't happen. When you see a gain, when Bitcoin goes up and instead it goes sideways versus reversing. That tells you that you don't have sellers just hammering it down. And basically the price action has changed. So right now, there's nothing to see on Bitcoin here. Yeah, it was a nice little inch up yesterday. First, I mean, again, big candle, not really, but it was bigger than the previous days. But still, it was absolutely nothing. I'm still in the camp where here's your bigger time frame on Bitcoin. You're still probably going to head down to this low down here, just below 25,000. And then I'm still in the camp we have a good shot of hitting 20,000. Now, as long as the stock market doesn't collapse, then 20,000 may hold. That's a big level. Maybe we have to test double bottom. If the NASDAQ, which is my fear, has a 30-40% drop in it in 2024, then that's where I worry that not only do we go here and then here, right? But then we go much, much lower, and that's where a 10K price target or 9K price target is a possibility. If the whole system starts to collapse, if the stock market really collapses, that's where that could happen.
Bitcoin stays stuck below $26,000, offering little excitement in a month that started with a plunge to an 11-week low. Alternative coins like Ethereum, Binance Coin, Ripple, and Tron also see minor losses, while Dogecoin, Cardano, TONCOIN, Polkadot, Polygon, Litecoin, Shiba Inu, Pepe, Compound, Gala, and ApeCoin face more significant declines. The overall crypto market loses $10 billion in a day, with the total market capitalization now at $1.040 trillion. The Federal Reserve's Vice Chair for Supervision, Michael Barr, states that the U.S. Central Bank is far from deciding on issuing a central bank digital currency, CBDC. He expresses concerns about USD stablecoins, highlighting potential risks to financial stability, monetary policy, and the U.S. payments system. JPMorgan Chase, America's largest bank, is considering a blockchain-based deposit token for cross-border payments and interbank transfers. This digital asset, different from JPM Coin, could accelerate cross-border transactions and is awaiting regulatory approval. If approved, JPMorgan might launch it within a year for corporate clients. Deposit tokens represent a digital version of customer deposits, facilitating instantaneous and cost-effective transactions. This move underscores JPMorgan's continued efforts in blockchain technology and its intention to expand blockchain-based financial solutions beyond its existing offerings. Let's continue our discussion with Gareth Soloway.
The dollar is starting to inch back up. It was down just a bit, all right? But again, here's a tail on the dollar, so we were down here. We've now started to float back up. The dollar, to me, remains very overbought. I'm personally in the camp that the dollar is going to pull back, thus Newmont mining, short-term for a bounce, and also I think economic news is going to start to weaken a little bit. So ultimately, I do think that we are going to look at a pullback in the dollar. Now, again, is it a pullback? Is it new lows in the near term? My guess at this point, just pullbacks, but obviously I'll keep you guys posted on that front. All right, this is your gold chart. Briefly, gold is basically just stalling out today. We continue to be consolidating in what I would consider a bullish pattern. Okay, now one of the things I wanted to go over briefly with you guys is just the keys to understanding why gold, the cycles in gold, and I'm going to explain, because a lot of people, and sorry to get sidetracked here, but a lot of people will look at this and say, oh, why isn't gold breaking out? Well, let's talk about that. Okay, so number one, there's a couple scenarios. There's phases in the market. Phase number one, okay, and I'm going to try to write this up here. So you have phase number one. And phase number one is good news, right? Good news is bad news, okay? Bad news. All right, now good news is bad news is what we're in right now. And when you have good news and it's bad news, the market goes down, but the dollar rallies and yields rally. That makes it very hard for gold to rally because the dollar is going up and yields are going up. That's the phase we're in right now. The phase that we're going to enter next is not going to be the big breakout on gold. Okay, it's not. It's going to be a slow up move in gold back to these highs here, these triple top highs, maybe a small breakout. And the second phase is going to be good news, or bad news, excuse me. Okay, let me erase that. So bad news is good. Okay, so the markets will likely like this segment, right? So this area of bad news being good news, the markets are going to say, oh, this is good. The dollar's declining. Yields are pulling back. Therefore, the markets can go up. Gold, because the dollar's coming down, will also go up, but it's not going to be that monstrous breakout. The monstrous breakout is going to occur on the third cycle that we probably won't enter till next year, right? And that's going to be bad news. Basically, it's going to be bad news across the board, right? It's going to be bad is bad, okay? And bad is bad means that you're going to get to a point where the economic numbers are going to get so bad, but the Fed cannot cut enough because inflation is high. So inflation's going to stay up. Yields will start to kind of fluctuate a little bit. The dollar down is actually going to be bad. So in this scenario, right, the market goes down in good news is bad news. In this scenario, the market goes up. And so one of the reasons why, even though the dollar's falling here with good news is bad news is good news, it doesn't basically offset the fact that with the markets going up, less people want to buy gold. It's risk on, right? So that's why gold will go up a little bit, but it's not going to have a big one. This is the one where, holy cow, gold will explode when bad news is bad. The dollar falls, the stock market falls. Gold is one of your only options. Maybe Bitcoin. We'll have to watch the cycles. But this is where you get the huge breakout on gold. All right. So I just wanted to go over that, guys. I think that's a really important understanding because so many people out there are like, you know, I don't understand why gold isn't ripping. We had this big inflationary period. It's the third and final cycle where you enter a recession and it gets bad and the Fed can't rescue and the dollar actually dropping becomes bad for the markets. Right now, the dollar dropping is good for the markets because, again, it's signaling the Fed may not have to continue to hike. It's when things get out of control, which will happen in 2024, that becomes bad for the markets. And again, that's when gold takes off.
Don't forget to join us as we explore the unfolding events. Coinbase aims for global expansion in regions with clear crypto regulations, shifting attention from the complex U.S. regulatory landscape. Stablecoins like Tether, USD Coin, and DAI blend crypto traits with stable values, making them a crucial bridge between digital and traditional finance. Stablecoins come in 4 types: fiat-backed, crypto-backed, commodity-backed, and algorithmic, each with unique characteristics. Stablecoins, worth over $123 billion, offer reliability but aren't risk-free. They're vital for crypto's journey into mainstream finance. If you enjoyed the video, don't forget to give it a thumbs up and subscribe to our channel for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.